Hey guys, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh and we have lots of queries. We're going to get to them in just a minute. But first up, a look at the markets. There's just no respite. And even now, we are seeing a 1.5% cut on the Nifty, 260 points gone over there. So there's absolutely no respite. We're at the low point of the day. 17,863 is where we're at. The mid-cap index is also seeing losses widen. So it's a 950-point cut that we are seeing on the mid-cap index. Over 3% gone over there. So that is how the market setup is looking. I mean, it's definitely a down day, no two ways about that. But most of the global markets also under pressure. So amid that context, you are seeing these cuts come through. Let's now get to all of our queries. And we do have our guests joining us to, take you through all of those queries today. So I'm going to welcome them on this show now. We have Vijay Chopra of EnochVentures.com to join us, as well as Rahul Sharma who's at Equity99 Advisors to join us. Now, gentlemen, thank you very much for joining us today and taking out the time for all of our viewers and, answering these questions. The first query comes in. Now, our viewer holds 50 shares of HDFC Life. He bought these at 600 rupees a piece. He says he's a medium-term investor and he wants to know what he should do with this. Rahul, let me come to you on this. He's saying he's a medium-term investor. HDFC Life, actually, he bought at 600. It's currently at around 575. Even if you look at it for the year, it's been around a 12-13% cut. Do you think in the medium term there's a chance that he could make up this loss?
Good afternoon, Pavitra. See, I think definitely he should hold on his position in HDFC Life. See, right now, it is trading near, not so far from his buying levels at 570. And I think the HDFC Life has got good support levels at 555 levels. And currently it is trading near its immediate support of 200 DEMA, which is placed at 270. So I think he should definitely hold on. Although this panic of market which we are witnessing has definitely brought down the prices, but I think he should hold on HDFC Life for medium to long term.
Okay, hold on for a medium to long term. By the way, Rahul, what are your thoughts on the market from here? What kind of range are you working with? Today seems to be a complete free fall. 285 points gone, and it's just we've broken below all of those key supports that we were tracking. What is the kind of range that you're looking at now?
Yes, Pavitra, definitely today has not been like a good weekend trade for all of us. But I think the 17,800 levels are the strong support for the Nifty. If at all we breaches it, then index may fall to 17,600 or 17,525 levels. So definitely this thing or this kind of trade which we are witnessing was not we were expecting. But still, I think from coming week, I think we should get towards some what we call consolidation or some rise in the market. So I think this is very much temporary, and what we are getting from COVID situations from outside world should not impact hugely or widely to our markets going ahead.
So maybe the last week we'll still see Santa come, even if it's just for a few days, right? So let's hope for that. Let's see how that goes. But the next query is also coming in. This one is from Rupal Bayani. She writes to us from Rajasthan. She holds 25 shares of Apollo Hospitals, which she bought at 3,700 a piece, as well as 45 shares of Sun Pharma, bought at 105. She's a long-term investor and wants to know what she should do now. It's a good day for us to be discussing the pharma space. Rahul, let me come to you on this. Of course, these stocks have done quite well. She's made good money on it as well. Do you think that, after this underperformance that we've seen in the healthcare and pharma space, the move is only just starting higher?
Definitely. See, both of these stocks, Apollo Hospitals and Sun Pharma, are good. And even on the technical charts, I'm talking about Apollo Hospital, the charts are very much amazing. So it is and also it has having good fundamentals. So she should definitely hold on to this stock. The resistance on upside for Apollo Hospital is placed at 4,890 levels. And if at all it crosses the same, I think stock may show higher levels of 5,200 very, very soon, which will be the target price for this trade. And I think because already she's getting good profits, so she should keep the stop loss trailing in a trailing form. And as soon as it gets higher, you should also trail your stop losses. For Sun Pharma, I think the stop loss is coming at 980 levels. So keep holding it. Charts are in positive zone, which have a resistance at rupees 1,050. And as soon as it crosses 1,050 levels, it should go towards 1,150 levels soon.
All right, got it. That is on Sun Pharma and Apollo Hospitals. By the way, Vijay Chopra is also joining us on the phone now. Vijay, good afternoon. Thank you very much for joining us today. So the query we were talking about is on Sun Pharma and Apollo Hospitals. Our viewer has a long-term horizon. She has made good money on these already. Do you think these are good bets to hold on to? And especially, at a time like this when for the past couple of weeks, we have been seeing this up move in the pharma and healthcare space.
Well, Pavitra, I think that, these things are pharmaceuticals with impending fear of COVID.
Okay, Vijay, I'm sorry, we have you on a very, very bad line. I cannot hear, what you're saying. So I'm going to get our team to please try and repatch that connection. In the meantime, let's take another query. This comes in from Divyesh Banerjee, who writes to us from Guwahati. He holds 100 shares of Bajaj Finserv, bought at 1710. He also has 200 shares of RBL Bank, which he bought at 120. Again, he's a long-term investor and he wants to know whether these stocks are worth holding for the long term or not. Rahul, coming to you on this, I know there have been cuts on Bajaj Finserv, but a lot of people talk about this as, the evergreen kind of stock which you can keep on holding. Do you have that similar kind of view on this one?
Similar kind of view, Pavitra. Both of these stocks, Bajaj Finserv and RBL Bank, whatever levels you have get into this trade, I think you should hold on if the view is long term. Bajaj Finserv, although if we see on the charts because of the market conditions, it has been consolidating from a good 3, 4, 5 months. But recently, yesterday, it has crossed its 200 DEMA and has been trading on the lower range. But I think if the prospect or the horizon is for long term, then Bajaj Finserv and RBL both do have great potential to give good and massive returns in the portfolio. And just the fact that you should be having a horizon of long term in both of the stocks.
Okay, got that. Also, in the past couple of days, we have seen somewhat of a correction in a lot of the banking names. Do you think this is something that's likely to sustain? And within the banking space, if you were to pick something in the mid-cap banks, what would you suggest?
See, I think the PSU banks have done great in recent past, and they've got great potential on going ahead too. My selection from that segment will be Bank of Baroda, Federal Bank. So these two banks are doing really good, and they have massive potential to give good returns to your portfolio.
Okay, got it. My team is telling me that Vijay is back on the line, so I'm going to try again. Vijay, the query we were talking about right now is on Bajaj Finserv as well as RBL Bank. Our viewer has seen, quite they are suffering some losses, and this stock also has not done much, right? This year it's actually down around 50%. But do you think this is exactly what I asked Rahul as well? Do you think this is one of those evergreen stocks that you should just hold on to?
Well, yes, I think that Bajaj Finserv has a very huge amount of lineage. It has huge respect in the market, one of the best NBFCs, one of the best corporate practices they have. So I think that this is just momentary. And I would say if somebody is holding, then they should keep on holding with a stop loss of 1400. Otherwise, if you want to take fresh positions, maybe Monday would be a good day to get into Bajaj Finance. Because I still expect that, we might see a comeback or a pullback in the markets and a lot of stocks because they're oversold.
Okay, that's on Bajaj Finance. What are your thoughts on RBL Bank? And if not RBL, is there something else that you prefer within the smaller bank space?
Well, yes, I think that, better than the RBLs and the other IDFC banks of the world, you can get into PSU banking stocks. So I think that stocks like Canara Bank or Bank of Baroda or even an SBI, these are great buys in a correction. And I would say that stick with the public sector banking. And I think that, even banks like Union Bank, because these stocks saw a huge run-up in the last, couple of weeks or 3 weeks. So if at all you get a Union Bank around 60 or 55, it would be a great buy. So, stay with the top-rung banks. Union, Canara Bank and SBI are my picks.
All right. That is, on the mid-cap banking space. The next query comes in from Ramesh Iyer, who writes to us from Delhi. He has investments in Bikaji Foods as well as RailTel Corporation of India. So he holds 50 shares of Bikaji at 300 rupees a share, and he has 5,000 shares of RailTel at 140. He wants to know what he should do with both of these investments, whether he should hold, whether he should get out. Vijay, coming to you on this one, your thoughts on Bikaji Foods. I mean, it is a market leader in its space, but in the past few days, it's actually not done so well. Do you think there's this is just, a minor correction that we are seeing at these levels, and then it's going to be fine in maybe a slightly medium-term outlook?
Well, Pavitra, during the IPO, when it was getting listed, even that at that point of time, some of the channels, they asked me about it. They have revenues, but the bottom line is really skewed. So I would love to see bottom line coming back in this company. So I would rather stay with companies which have a huge bottom line rather than a good top line. So I would recommend that get out of Bikaji in a rally. That this would be my call for Bikaji. So I don't think that for the next 6 months we're going to see an up move. Until and unless a couple of quarters, good quarters go by, we won't see a major upside coming in Bikaji for sure.
Okay, Bikaji not for the next few quarters at least. What about RailTel?
No, RailTel is I think that we have seen a huge run up in the railway stocks, and similar kind of a downturn is coming. So if at all you get RailTel close to about 100, 105, it would be a good buy. Again, railway stocks are expected to bounce back during the pre-budget rally. I'm expecting a pre-budget rally in January. So railway stocks might do well. But again, this is not the time to buy. Wait for some more correction. If you get the stock around 105 or 110, that would be a good area to buy.
Yeah, I guess the worry is that he did get in at a little bit of a high price. So let's ask Rahul that as well. Rahul, he got in at around 140. The high is also somewhere around 145, right? Do you think he got in too expensive, or it's fine if he holds at these levels?
See, Pavitra, I really have a similar view as Vijay is having for RailTel. See, the stock is amazing. It is a mini Ratna PSC government company. At present, RailTel's network passes to around 6,000 stations across the country. And the company's total order book currently is near to 5,800 crores. And it has been winning multi-crore orders consistently through the competitive biddings. And technically also, when we see the stock has showed great rally, as Vijay said, from 100 levels in September month to the recent high of 148. From where he has bought the stock. And from last 5 sessions, we are witnessing a correction. So the next support is placed between 100 and 112. So I think if at all you get the chance to average his position near those 2 levels, it will be really great, as suggested by Vijay as well. And holding this stock for even to horizon of 12 to 18 months will give good returns. And obviously, the budget is having focus. So I think he should really hold on to RailTel and average his position from the lower levels.
All right, got it. That is the call on RailTel. What about Bikaji? I know you agree with Vijay when it comes to RailTel. Do you agree on Bikaji as well, that this is perhaps not the best bet for the coming few quarters?
Actually, on the technical grounds, I don't have much data to it.
Yeah.
But I think, in my view, it's a pioneer and leading FMCG company. I don't have that much kind of conviction to it. But if at all I'll get much data on the technical grounds, I may conclude by saying my answer. But right now, I don't have much data on technical charts.
Okay, that is understandable. Bikaji Foods, very recently listed company, listed only in November. Vijay as well as Rahul, I'm going to request you to please stay on. We're going to take just a short 2-minute breather on the show, but when we come back, there are lots more stock queries that we're going to be answering. So you guys stay tuned for that. Welcome back. You're still tuned into Your Stocks, and we still have our guests waiting by to answer all of your stock-related queries. We have Vijay Chopra as well as Rahul Sharma with us to take us through some more queries. And the next one comes in from Mohan, who calls us from Chennai. He's actually on the line with us with his query. So let me get straight to him. Mr. Mohan, please go ahead. Ask us your query. Both of our guests are on the line as well, so they will be able to answer.
Yeah, thank you. Actually, I bought a Rossari Bio at the price of 900 rupees.
Okay.
150 shares actually. Whether I can hold it or I can exit or I can further I can accumulate, average it.
Okay. How long are you willing to hold?
I can hold it for at least 1 to 2 years. It's not a problem.
Okay. You can hold for 1 to 2 years. Vijay, let me come to you first on this. Rossari Biotech, he bought 150 shares at 900. It's currently closer to around 685. It's definitely not been the year for Rossari. But what do you think from a 1 or 2 year time horizon? Is this something you should hold on to?
Well, I think he should. If he has seen such a carnage already, he should definitely hold on to the stock because, and of course, try and average around 650 or even lower, if at all the stocks goes there. I see that it is completely oversold, and good chances are that, it might come back. If you look at the balance sheet, so the balance sheet has been growing consistently. In March 2021, they did a sales of about 690 crores. And 22 was 1,073 crores. So, sales has been growing. So is the EPS. So I think that when the sales are good, primarily the bottom line has come down due to the high input costs because of the logistics costs and whatever happened in China. The APIs were very, very expensive. And Rossari is dependent upon Chinese imports to a great extent. So as the situation improves, I think, I don't know about COVID, but I hope in the next 6 months to 1 year's time frame, things would ease out considerably. So it's a good company. Hold on to the stock. Good chances it might come back.
All right, good chances that this one might come back. On that note, Vijay as well as Rahul, I'm going to have to thank you because we've completely run out of time on this show. But thank you very much for taking out the time and speaking to us about all of these queries. With that, we're actually going to move on and bring you one of our specials. We are at the end of the year, so let's talk about the year that was. And now we're going to focus on the real estate space. So it has been a year of decadal high absorption, massive decline in inventories, sharp increase in prices across segments. These are some of the highlights from the residential real estate sector in 2022. The only worry, of course, is the rising interest rates. So Sonal wraps up the realty sector and highlights any possible risk to the upcycle.
2022 was about a lot of things. An uptick in real estate cycle is definitely something worth highlighting. We are talking about a steep uptick in residential demand and sales. So let's look at some numbers now. Absorption in residential real estate is not 1, 2 or 3 year high, but at a decadal high. Absorption in residential real estate is basically the amount of space or units which are occupied within a market over a given period of time, typically 1 year. In calendar year 2022, so far, it is at 447 million square feet, which compares with 400 to 425 million square feet that we have seen in past couple of years. It even dipped to 281 in 2017 when the cycle was undergoing some decline. While absorption is increasing, inventories have been declining. Unsold inventory was a big pain point for developers as supply was exceeding demand. But now trends are seeing a reversal. Ready-to-move-in inventory is declining. From levels of 849 billion in 2019, it is now around 500 billion, and that is a big decline. That is for ready-to-move-in inventory, which was still more resilient than under construction. So if we look at the under construction segment, that has declined from calendar year 19 to calendar year 2022. Calendar year 2019, remember, saw a massive increase in inventories. So barring Hyderabad, in the top cities, there is a decline. 23% for Mumbai, 29% for Bengaluru, 14% for Chennai, 20% for Gurugram, 4% for Delhi, 34% for Pune. Only Hyderabad saw an increase of 145% in inventories. Decline in inventories was accompanied by increase in prices. We have been speaking to a whole host of developers, and they have been of the view that passing on price hikes in the last quarter was not very difficult. So price hikes in the September quarter in some geographies have been massive. 3 to 4% in Mumbai, 14% quarter-on-quarter for Delhi NCR, 30% YOY there. Hyderabad has seen a 10% price increase. Navi Mumbai at 14% YOY, up 8% sequentially, and Chennai has seen a decline sequentially, but an increase on a YOY basis. Bengaluru and Pune have also seen moderate price hikes. This is across the industry, including organized and unorganized players. But some experts are of the view that maybe it will not be easy to pass on price hikes now, considering the massive hike in interest rates as well as the inflation. If we look at how listed players have done, strong first half of FY23, more than 100% growth in some cases. Prestige, Macrotech, Mahindra Life Spaces saw more than 100% growth. We have Godrej Properties and DLF with more than 60% growth in bookings, Oberoi at 92%, the likes of Sobha, Kolte Patil, Brigade and Sunteck between 20 to 50%. So, what could the risk to this massive rally be? Definitely rising interest rates. RBI has hiked rates to 6.25% in last few policy meets. And we did ask some big real estate names, and DLF told us that demand for real estate sector was impacted when mortgage rates were at 9%, while Prestige Estates told us if mortgage rates cross 9%, it will impact real estate demand. So rate action from the RBI will be key to watch. Ending this data with some news we got some time back. This is related to commercial real estate, but only goes on to show the impact of rising rates. Blackstone and Starwood Funds Limited saw withdrawals from their real estate funds, and this was following surge of redemption requests. Big and small investors were queuing up to pull money out of real estate funds, which is a sign that yes, the surge in interest rates is threatening to impact at least the commercial property sector. These are two isolated cases, but whether it starts to have an impact on the entire sector, we'll wait and watch.